month. It was expected at 0.6%. And then we have our CPI year over year, which is expected at 3.7. It came back hotter at 3.8%. If we're looking at the Fed Fund futures, the reaction to the CPI prints has not increased inflation expectations. Well, we could say, well, how is that? They did increase. They have not increased in terms of the reaction to the Fed Fund futures, not yet at least. We went into the morning, or actually it was in the afternoon yesterday at 30.4, and then this morning it was 30.2. And so the rate hike expectation here has actually fallen. But what you'll notice is that it actually appears to have risen inside of the September timeframe. And let's just take a quick look at that. I'm curious as we are moving forward here into the morning. What did the rate? So this was at 25.4 this morning. Now it's at 31.6. 31.3, that has risen. 36.3, that has risen. And so you go actually into the April and March, these probabilities have risen actually. The January probability early this morning was 27.3, now it's 32. The December 9th meeting was at 22.3, now it's at 27.6. The October was a 13.9, now it's now a 15.8. So we do have a situation here where the Fed Fund futures are starting to price in a higher probability for a rate hike in the future. Why is that important? Because that's not priced in. We have gone straight up 1,000 plus points from those April lows, which were a profit target for us. We had traditional longs. We've had very technical setups along the way inside of this rally. But what is not priced in is that the Fed Fund futures, not the Federal Reserve members, traders, are now starting to, they have to price in a higher inflation expectation in the future. And they're doing that in the pre-market right now. They're doing that. And so this is exactly the type of situation that we have to be aware of in relation to VIX pullbacks. And we have not broken trend. It's very important to note that we have not broken trend on the VIX. But the dollar did break its series of shorts. So the dollar is inside of longs. So we have really the dollar strengthening, breaking through its series of shorts and being in longs. That is a bearish new environment for the indices, right? Bank has not broken trend. The VIX has not broken trend. It certainly hasn't. But now the Fed Fund futures are starting to correct and start to try to price in. It's where it's not just paused for longer. It is actually starting to price in a hike out into the future. And why isn't poor? Why am I drawing then up a VIX long from lows here if the VIX hasn't broken trend? Because if the dollar is strengthening and Fed funds are pricing in a rate hike, then there's going to be a group of... This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.